Yes guys, Jess here, back with another video. You've read this title. We have massive liquidity piling up above us and we have some liquidity below us. I have a lot of charts prepared for you guys. So with that being said, let's get straight away in towards the content. Before we get straight away in towards the analysis, make sure to smack up that like button. Let's try get above 20 likes this video. That would be absolutely amazing. And with that being said, let's get straight away in towards this banger. Bow. So as you can see here, we had a CME gap to start with and we started to move upwards. However, we came to close that gap and we continued to move to the downside, creating another gap above us instead of below us. And then in towards the start of Monday, which is today, we closed that gap nicely. And you can see we're consolidating right now, which is looking very, very beautiful. This is going to set us up to potentially have that move to the upside if we perhaps come and grab the liquidity first. Whatever the case is, I do think that within the next 72 hours, we're going to have a move all the way towards the upside. Whether that's when we could grab the liquidity to downside first, or whether that's us just pumping from now, I do think that a move higher is definitely inevitable. And as you can see, we have the two LARP lines that we drew last time in the video on the 23rd. And you can see that we moved up perfectly from that falling wedge that we had in the 6-hourly time frame. We had a stalling point just like we predicted over there, and we started to come down perfectly. So now it looks like we need to have a decision point where we bounce from here, or we have that liquidity grab that we actually spoke about, where it's the best opportunity in my opinion to be actually adding to positions, because that's Bitcoin's last line of defense before we get into lower targets, which we will cover. But I do see that if we can start moving up now, that would be absolutely amazing. We can start to actually head towards our 100k target, reclaim that level, and then we can analyze things from there. So for the imminent short term, you can see that we have a nice falling wedge in play right here. This is the reversal pattern that is typically bullish if you have a previous move upwards, and then you have this consolidation, this falling wedge consolidation where it's slightly tilted downwards. That's very, very bullish, as it offers high risk reward opportunities, and it's likely that you continue the same way you went up. So let's see if we can actually get some bullish demand stepping in from the support level over here, and then we start to crack this trend and punch in a higher high. That would actually be your first indication that actually we can actually start reversing this trend all the way to the upside. Now looking in towards this support level on a 4-hourly time frame more deeper, you can see that this level was previous resistance twice, and then we turned this into support many times, and this has offered a lot of pressure to the upside once we did tap this area. So you can see that it's likely that we can see a short-term bounce, and we're very close to the trend where we can actually start to grab some of that upside liquidity. So if we start to get strong 4-hour closing candles, we can start to see price action to the upside. Now, one thing that makes me very bullish is, as you can see, we had decreasing volume and price was actually decreasing. So when we had the FOMC around the 17th over here, we had a pullback, and that was actually a real sell-off as the stock market was actually pulling back as well. And then Powell made his further comments leading to another leg down, and that was actually backed by some volume. And you can see ever since then we've been coming down quite slowly. We've been actually bleeding, creating lower lows and lower highs, and that's actually not been backed by volume. So you can see this can be manipulation or suppression of the price by different participants in the market, as volumes are lower. We had Christmas, we had Boxing Day, and volumes were quite low. People and institutions that actually move price and are responsible for a lot of the volume weren't present, so it was easier to move down price. Now we want to see a breakout followed by a nice volume node, and then that would actually indicate that this move to the upside, this reversal, was actually real. So whether we lose the support now and actually come in towards our next support level, which is approximately around that 88k level over there and around our 90k level, I would say if we can get 90 towards 92, maybe 88 as a wick, that would be a beautiful opportunity to be catching that reversal to the upside too. So either scenario, I'll be definitely prepared, but I won't be surprised if we actually crack this trend first and actually leave the liquidity down here for later, because there's a lot of people actually calling for this scenario. A lot of people are waiting to actually buy the dip here, which does make sense. To be fair, we have a nice support level. We can actually deviate and grab all the downside liquidity that we have just here before actually moving higher. But yeah, I do think that there can be games being played where we crack the trend first before actually coming down to grab that liquidity. So you can see here we have a bit of liquidity below us, however the majority is actually above us. And if we zoom in more closely, you can see we have a little bit left around the 93k in towards 92.5. So it's possible we can come down, maybe wick in towards 90 even, before actually reversing and taking at 96k liquidity, then reclaiming 100k and moving in towards 102. So this is definitely the scenario right now. We can grab this liquidity above us first though, because that's where the majority actually resides at the minute. So be on the lookout for that. Make sure that you're aware of the scenario. And you can see this is the time to be paying attention. Funding rates are extremely low. You can see on most exchanges, funding rates are very slow and even negative at times. So it's looking like this is definitely the time to be paying attention and establishing long positions, because the risk of doing so is very low. We know when there's low funding rates, majority are actually short, and statistics actually points to the majority being wrong. So this actually makes me more bullish, and it's making me actually look for more long positions. And we couple that with TA, and you can actually increase your edge in the market and probability of being correct. Now, one thing that needs to start picking up is the daily exchange volume. You can see that this has been dipping down, which is normal during the Christmas time. However, this leads to more manipulation when it starts coming down, and it's not very good for the Bitcoin price. So we want to see this start picking up in towards the new year, which is literally 2 days, and then perhaps we can look in towards Bitcoin actually reclaiming 100k, and then we can talk about all season more and more. Now you can see November typically is very positive for Bitcoin. However, December is actually quite mixed. So the average is around 4%, coming from 46% and 21% previously in October. So us closing quite neutral right now, currently at minus 2.8%, is not something to be really worried about. It's actually not bad. However, again, it is a outlier in the data sets, because previously in our halving years, you can see that, and in election years as well, you can see that we're massively bullish and positive in December. However, this time things are not the same. So again, that can be a massive warning signal, and we have to look at the data now to see if that is a potential warning for a local top or not. So as you can see, we had a rising parallel channel, and you can see we broke down and actually retested it, which is very bearish. To be fair, it is a bearish classic setup where you actually break down your parallel channel after ranging within it, and then you retest it and actually break down, and your measured move is actually the bottom there. So to be fair, there is a potential scenario where we actually come and grab all of that liquidity and actually start moving higher, which is still an opportunity, but this is something to be aware of. And we have to be looking at different scenarios to see if this is very likely. In my opinion, I don't think it's too likely. I think the lowest we can actually get this pullback maybe is perhaps the 88k as a wick, and then we continued buying opportunity. That's where I'll be most interested, and I'd say invalidations will be around the 83 for that trade. However, it is possible we can just continue lower and lower. So again, we have to look at the relevant levels if that is the case. So you can see we have our lucid SAR, which is our stop and reversal indicators. This has perfectly been timing our stop and reversals in the market, especially this point over here where I mentioned if we crack that channel over there, we can definitely start seeing price accelerating. That's exactly what we've done, and right now this lines up at the 88k level. So again, we can see a wick in towards that lucid SAR and then immediate bounce front running the 382. However, if we do come lower, you have 82k for the 382 Fibonacci, and you have that 21 exponential moving average on a weekly time frame, which is lining up perfectly within this pocket, which is typically a bullish pocket. So if we do come down a lot lower, that will actually play out a 25 to 30% correction, and we can see resuming buying activity in the market. Now we spiked into this massive trend line that's come all the way from 2018. So that is a massive signal where we have rejected immediately from. However, I do think it's not the time to be getting worried. I do think that once we come down a little bit more, or even if we start just bouncing now, we've had the nice pullback from the top side down now, and that's currently decent opportunity to be bidding. So 100% I do think that this is not the cycle top. This is just a short-term correction before we actually start coming higher again and actually testing the price. We can actually come back up slowly, start chopping around a bit more, and then resume prices in towards that 120k mark, and then perhaps maybe we have some sort of second test of this trend line, just like 2021, before we actually top out. So food for thought. This is just a diagonal trend. I do prioritize horizontals first. You want to look at price action, you want to look at where the liquidity resides, you want to look at sentiment, timing cycles, all of these things. So just a simple trend line is not enough to be determining the cycle top, in my opinion. And as you can see, our cup and handle is still in play right now. We've had this fractal and this playing out exactly to the T. We have this macro higher low from the 2020 fractal that we've taken from over here, and the timing is very scary. Like, it's very accurate. You can see around the December into January time we had that dip, and then we had a nice high-low form, and then we resume the buying exactly like that. So I do think that definitely that is the case here. We have a high-low here, and we're looking to create that high-low, and then we're going to be seeing a next push in towards our cup and handled measured move. And as you can see over here, we're spiking into our range quarter, and we have a lot of wicks holding price at this level. So definitely we can see price actually accelerate from here and actually test our range high from our projected cup and handle measure move. This is definitely a scenario where I'm looking for price to actually hold the 92k level in towards the 90k level. That's key for me, definitely, before we resume the up only environment. If we start to lose these levels, then definitely we can go to the levels we talked about before and come into some sort of mid-range over here as well, where we have our 382, our 0.5, and we have our lucid SAR as well. And we also have a CME gap just a little bit below, so we can get some wicks in towards that level, and the bull market will still be intact. So definitely I do think that this is not the time to be getting shaken out. We're still looking good on a higher time frame, so when you're in doubt, zoom out. So again, if you agree with that analysis and you want to be taking advantage of these opportunities, make sure to click the first link in the description, and that's the link for Blofin. Blofin is an exchange that is very, very good. They have one of the lowest maker fees in a minute. They have a lot of exchange bonuses going on at the minute. They're also non-KYC, so you want to be checking with your country if that is actually available and if it's legal. And I definitely recommend to use Blofin. Blofin is a great exchange that I've been using for a long time, well before I was affiliated, and I do recommend to be using Blofin as they're one of the only exchanges to actually have fire blocks. So essentially that's a third-party custodian where they can't just rug your funds like FTX did. So Blofin is looking really good. They're growing really, really quickly, and I do recommend to be using Blofin. That's the first link in the description if you want to be taking advantage of these opportunities. So as for Ethereum, we still have a measured move from our neckline to our base over there, and if you take it to the breakout over there, it lines up perfectly with our 7k level over there. And you can see if we take a Fibonacci projection and we take it from the top to the bottom, we have a 1618 and our 2618 in and around the same region. So these are rough targets of where Ethereum can go. So definitely these two scenarios that I'm looking at. I'm looking for Ethereum to come in towards 7k on the breakout and then go in towards that 10k mark. And if you're looking towards this tweet that I just tweeted yesterday, this was a screenshot from July earlier this year, and this is when Bitcoin was at 62k, 63k, and you can see Ethereum was at 3.4, and Ethereum right now on the charts is literally a little bit even lower than 3.4. So again, Ethereum is massively lagging Bitcoin. Bitcoin is much ahead of Ethereum, and Q1 is the best for Ethereum. Q4 is actually the best for Bitcoin. So definitely I want to be taking advantage of these opportunities. Make sure to be signing up to Blofin, but definitely I think we can see a massive move and catch up from Ethereum as opposed to Bitcoin, which typically performs well as it has already done. So you can see Ethereum has actually been bleeding for over 2 years, and I'm expecting massive weekly candles to be actually punched in, and we can erase well over 15 to 20 weekly candles, which is actually enormous if you think about it. In a matter of like a month for Ethereum, is definitely on the table. That's typically how it goes. You can see this massive candle over there in 2017 erased so much bleeding, well over a year of bleeding over there, and that's exactly what's going to be happening. So you don't want to have your finger not on a pulse. You don't want to be caught with your pants down. Essentially, this alt season is going to happen really quickly. I believe. I think between now and April we're going to have the alt season, so you do not want to be missing out. Make sure to be having your accounts loaded up. Make sure to be getting ready for that massive explosive move, because alt season typically happens in a flash. We don't have time to be wasting, so definitely this is time to be paying attention. And you can see for the short term for ETH BTC, we have this massive ascending triangle over there, which is the typical reversal pattern. We have a nice W formation pattern from Ethereum, which just means it punched in a lower low and now has a higher low, and shifting market structure, we've actually broken this previous lower high over there, and we've punched in a nice higher high, and we're meeting our 50-day moving average. We have our previous month's mid-range and our previous week's high. So if we can actually print another nice 8-hour green candle like this, that will be a massive reversal signal. We can see Ethereum actually start to break above this nice parabola over here, and then we get in towards our previous quarterly low and actually our monthly open just above over there, and we have a few more resistance points that we'll cover once we do get there, and it's irrelevant. But for now, even if we get a nice retest, that is still fine, and Bitcoin actually comes in towards that 90k region. I think Ethereum will actually hold up a lot more. Ethereum won't dump as much, in my opinion. Just looking at this chart, Ethereum against Bitcoin, we're looking for that catch-up trade, and this is the chart to be paying attention to. And yes, guys, that will mean that Bitcoin dominance will start coming down. And our clue is this rising wedge formation pattern, which is a massive reversal signal. Every time you have a nice rising wedge and you have a breakdown and a retest, typically that indicates weakness and price actually coming down. And you can see by these hammers, every time we had a massive top by Bitcoin dominance, we had a massive alt season. So this is the time to be paying attention. This is the time to actually be taking advantage, because every time we had that massive hammer, you can see you could correlate it to these horizontal, so these vertical lines on the screen, which indicate massive parabolic advancements for Ethereum, and by extension your altcoins will go absolutely bonkers. And you can see we have tons of support. Our Gaussian channel for Bitcoin, last time we tested it we went parabolic, and right now we're testing it at the minute. So even if we come lower, we still have that Gaussian channel support all the way in towards 80k. So this is definitely looking good for Bitcoin. As Mr. Crypto points out, history is exactly repeating. We have our Trump inauguration trade that's playing out. So that's looking really good. Timing wise with the dominance compared to the Bitcoin price, you can see once we have consolidation and we reach that 245-day mark, we have a massive alt season that's actually starting. We also had news from FTX. So this is looking really good that your creditors are being paid, and that's almost $12 billion in stable coins, and that will definitely start moving in towards altcoins, as investors already feel like they've missed this Bitcoin trade. So as you can see at this time of this recording, it's looking really good. We're looking like we can potentially break this trend line. I won't be surprised if we get a rejection and we just come and grab this liquidity. That's completely fine. I'll be adding to positions. And actually, I'm actually in an Ethereum position right now. So I do think Ethereum is looking really good, because it's going to be actually holding up a lot better than Bitcoin. And as you can see, guys, we have a nice symmetrical triangle that we were covering in the last video. As you can see over here, we were covering on support there. If you took advantage of that information, you can see Ethereum was on nice support. We were looking really good, and right now we're holding that support really nicely. And yes, if we can actually hold this and start moving in towards this one and start confirming multiple closing candles here, then definitely Ethereum's looking really good to actually reclaim this and confirm that power of 3 with our previous quarterly high, previous week's high over there. So yes, if we can actually get above that level, it's massive resistance, but again, if we can actually confirm multiple closing candles above there and actually break above, I do think that we can actually go parabolic for Ethereum. As you can see by my tweet that I did recently, definitely Ethereum is looking really good for that power of 3. We have a nice liquidity grab / fake out or manipulation or whatever you guys want to call it, and then you reclaim that previous support that turned into resistance and now can turn back into support again. You can actually see Ethereum actually shatter that 4k mark and then moving in towards the Fibonacci and cup and handle targets. And so you can see Solana, I called on my Twitter. If you go over here, you'll see that Solana was a coin that I was actually calling for you guys. I was saying Solana, guys, is on 200 MA support. We had a horizontal as well. We had our upsloping trend. We had the RSI and the stochastic RSI on top of that as confluence too. So it was oversold on all of these. That typically indicated upwards pressure, and we were nice support. So if you took advantage, you will follow me on Twitter, you're able to see this. I even posted about it twice, and I said let's see if bulls start stepping in here, and you can see Solana's actually moving up nicely. But this was the point where I was actually long, and I had a second position over here as well. So this is looking extremely good for Solana. And if you want to be taking advantage of these trading opportunities and be catching these nice low risk high reward opportunities, make sure to be using the link in the description, the first one over there for Blofin, as you can see right over here. So that's it from me, guys. If you enjoyed the video, make sure to follow me on Twitter, have post notifications on to be updated with all the posts that I do actually have, and then you'll be taking advantage of this information. You'll be getting it nice and early. And yeah, have a blessed rest of your day. Peace, guys. See ya. Bye bye.